The NASDAQ nears breakout territory on a strong Wall Street day. Meta Platforms leads the charge, and it's reunion day right here on the show. Welcome, everyone. This is the Final Bar. Welcome back, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and I want to welcome you to the Final Bar. It's going to be a great show today. We've got a lot of reversals taking place. We've seen the market sell off the last couple of days. Honestly, didn't like the selling that we saw in the afternoon the last 2 days, but today it was a gap up and a takeoff. We nearly broke out on the NASDAQ, and so we got a lot to go over. I'm going to try and get through it quickly with you. Let's jump into the charts. So first, on the Dow Jones Industrial Average, you can see up 525 points. That was up nearly 1.6%. S&P 500 did even better, climbing almost 2% today, up nearly 80 points, up over 4,100 again, back to that 4,135 level. And the NASDAQ, strongest of all, led by Meta Platforms, among others. But NASDAQ up 2.4%, nearly 300 points today, back to 12,142. And this is very close to a high. You can see the buying in the NASDAQ all day long. We went right up to a key area of recent price resistance before pulling back right in the final hour. But otherwise, it was a very strong day for the NASDAQ. Small caps, mid caps actually played along with the big boys in the group as well, both gaining a little bit more than 1.5%. And check out that VIX today, 10.9% drop. Back down below 17. I had pointed out we wanted to watch that 20 area where over the last few weeks we've been kind of failing. We get up to 19 and change, up near that 20, and then we roll back over. Same thing again today. With the buying today, we saw the VIX take a pretty big drop. Looking at the chart list that I like to put together, you can see this in order of performance today. But there you've got the NASDAQ 100 leading, then the NASDAQ, S&P Dow, and then the mid-cap, small-cap. So even though everything was up, the performance on a relative basis, you can see mid-cap, small-caps, still something going on there, really unable to keep pace, even though it was a good day in both those areas. That's something to continue to monitor. But until that changes, I think you want to stick with these high market cap companies that are leading the NASDAQ 100. Moving on to the sectors, you can see the XLC. This has been your leader for the entire year. And they're back in the driver's seat again today. All the aggressive groups, at least the three that I like to follow, you can see the XLC, XLY, XLK, all leading the charge today. So that was a good sign for the bulls. To the downside, we had all 11 sectors up, but energy lagged, healthcare, staples, utilities. It was the defensive groups taking a breather here. If we do get the breakout, this is going to be the chart that I would be watching. I would be wanting to keep track of who leads on a breakout. If we break out and we've got defensive groups leading, I would look at that maybe as a little bit of a red flag. If we break out and these aggressive groups keep moving higher and leading the market, I would view that very bullishly. If we flip the period here, this is just today's action, but if we flip the period to the year to date, you can see very quickly XLC 24% year to date, XLK 20%, XLY 14.5%, everything else way below. These are the three areas that you want to see leadership from in the resumption of a bull market. I love what's taken place so far, but again, we need to see the breakout and we need to see who leads on that breakout. I think that's going to be important. Finally, this other chart list, this is one I've shown the last couple of days, actually all week. And I had a bunch of you ask if you could get a copy of this chart list. I'll tell you how you can do that in just a minute, but I actually went through and made the changes that I talked about yesterday, where I've got all 10 technology stocks, all the top 10 holdings of the XLK in order, and also in order of their representation in the XLK. I've done that with all 11 sectors. And what it does for me is I can just quickly take a look down and see what is actually moving these various sectors. Is it those leaders? Is it the entire group? And you can see on the XLK, all green. You go down to the XLY, all green. Go down to the XLC, all green. This isn't about one or two stocks leading today's rally. This was the top holdings in all of these aggressive sectors that were leading the charge. You really didn't get a whole lot of red until you started moving down into the defensive groups. And still there, you can see there weren't a whole lot. We did have a few here in energy. As I said, energy was the weakest sector today. But overall, this was a wide participation kind of a move today. And that's what we want to see on a breakout. Still got a lot of work to do. So I mentioned, if you wanted to get the copy of this chart list, we are going to provide a one-time link in our Earnings Beats Digest newsletter tomorrow morning. It's a free newsletter. So if you'd like to get a copy of it, you're going to have at least a extra membership at StockCharts, because you can't download a chart list if you don't have room for it in your account. So you do need to be at least an extra member. But if you scroll down, if you go to earningsbeats.com, scroll down, you'll see an area where you can sign up with your name and email address. No credit card. You can unsubscribe at any time. So literally, if you wanted this chart list, you didn't want to be bothered, sign up, subscribe. Tomorrow, get the link, and you can unsubscribe. So that's our gift, or my gift to you this week. I know a lot of folks did write in about it, trying to figure out how they can get a copy of it. It takes a little bit of work to put it together. I think that'll be something that you can certainly add to your repertoire of analysis tools. 10-year Treasury yield. So this morning we had the GDP come out, and it was less than expected. I thought, okay, that's good news, because that's what the Fed wants. The Fed wants to slow things down. We got it. The problem was the PCE, personal consumption expenditure, was well above expectations. And that, unfortunately, is an inflationary measure that the Fed likes to watch. So I think what happened in the 10-year Treasury yield today, we saw a big boost there, up 10 basis points. I think what was happening there is the bond market was reacting to that inflationary report, selling bonds and selling the yield up. But it seemed like the stock market was paying no attention to the inflation. They were paying attention to the fact that the GDP was lower, which could in turn mean lower interest rates down the road. So it's really confusing. Depends on which side of the fence you're on. But it is an interesting, combination to consider as we go forward. QQQ. Yesterday, I said we needed to break this downtrend. We needed to get back through the 20-hour EMA. We needed to get through the 20-day EMA. Well, we did it at the opening bell, and we never let off the gas. QQQ went up all day long until it hit right at resistance. Look at these tops across here. We went up all day long, got right there, and then pulled back. I sent an email out to our members at Earnings Beats. I said, any leverage that you've taken on this weakness to the downside, personally, I got rid of mine today when I hit resistance. I don't know that we're going to break out. I think we're going to break out. But when I'm playing with leverage, I tend to take my money, my profits, and move back to the sidelines. So that's what I did. Let's wait, watch, and see if we can get through that key 321 level on the QQQ. A couple other charts here. Semiconductors. Nice hammer printing right on trend line support. That's going to be a big industry group to watch here over the next few days. If that holds, look at all these tops coming across here from 7,200 to 7,400. Key resistance. We broke above it. What does that mean? It becomes support. We turned with a hammer right off trend line, right off this support zone. So that was really important. Meta platforms, big earnings, big gap up. This was one of the reasons why we saw the XLC communication services lead. Internet stocks were on fire today, but there's always another side of the coin. And look at Crocs today. Crocs, big drop. We did come off the lows. I saw a beat on the revenues and earnings, but I did not go in to look for guidance. I'm not sure what happened there, but clearly there was a lot of volume. There was a lot of selling. We did get a little bit of recovery, which I think was good at the end of the, or at least in the afternoon session, but still got a lot of work to do to get healthy again, back above the moving averages on Crocs. So that's exactly what I'd be watching. I want to show you one more chart, and this is a chart that I've been telling members about. I've been talking about it on my shows. I've been writing about it. I believe the market, when you get into bottoms or potential bottoms, you start to see a lot of manipulation. I think Wall Street has to take time getting in, and they had to take time getting out at the beginning of that bear market that started in 2022. So what I did is I did a spreadsheet and I broke down the trading throughout the day, and I netted it all together within these 3 periods. So opening gaps, back when the market topped, opening gaps went up 6. During what I call amateur hour until 10 in the morning, it went up another 4. Balance of the day, though, it was selling. As we went up, we were actually seeing afternoon selling. Then we went through a period of massive distribution. Throughout this entire move to the downside, we lost at the opening gap. We lost ground amateur hour. We lost ground from 10 a.m. to 11 a.m., and we lost ground the balance of the day. That is distribution. Then we go into this period ever since then where we've been gapping down. We've been trading down in the first half hour, but then we rally back from 10 to 11, and look at the balance of the day. $96 higher from May 20th to today. $96 we've gone up after 11 o'clock in the morning. There's plenty of accumulation taking place, and we need to be aware of it. All right, we are going to take a break, and when we come back, I've got my good friend Erin Swenlin for a Market Watchers reunion. We'll be back after this break. Welcome back, everyone. I'm Tom Bowley, Chief Market Strategist of EarningsBeats.com. I've been guest hosting this week for Dave Keller, who has traveled to the CMT Symposium in New York City. It's been a pleasure being with you all this week. I know it's been kind of a crazy week. Wish I could have picked maybe a little bit better week. We've seen a lot of selling, then today we saw a big rally back. But honestly, yesterday I said there were no major breakdowns. Today, despite the huge day up, there's really been no major breakouts. So we're still within a trading range. I think the next few days to a couple of weeks going to be really telling in the market. All right. I do have a really good friend of mine, great friend of mine, my former co-host of Market Watchers Live, Erin Swenlin of DecisionPoint. She's going to be coming up here in just a minute. But before we get to that, I do want to just give you a couple of announcements. So first, I'd like to encourage you to send in your questions so they can be answered live on the air. Our email is thefinalbar@stockcharts.com. You can tweet us at finalbar@SCTV, or you can put a comment below if you're watching on our YouTube channel. If you've enjoyed today's show or this week's shows, be sure to like the video below and subscribe to our channel. Also, I'd like to share that tomorrow, Friday, April 28th, David Keller will be back. He's going to be hosting a very special live Final Bar from the CMT Symposium in New York City. I know he's got Ralph Acampora lined up as a guest. He'll have others. Ralph is one of the most interesting folks I've ever had the pleasure to talk to. I think you'll really enjoy that interview. So make sure you check that out. The live broadcast will be from 1 to 2 p.m. Eastern with a full replay at 4 to 5 p.m. Eastern as well. And then next week, we'll be back to normal here at Stock Charts as Dave will return to hosting from the StockCharts.com studio. His guests next week will include Julius de Kempenaar on Tuesday. Julius, as many of you know, founded the RRG charts that are featured right here on Stock Charts. And then on Wednesday, Dave welcomes Mish Schneider, Chief Market Strategist at Market Gauge. Those should be 2 great shows. Make sure you tune in for those. All right. It is my pleasure to bring in my great friend, Erin Swenlin. For those of you that are unfamiliar, when we first started doing Stock Charts TV, Erin and I hosted the premier show or the flagship show, Market Watchers Live. We did that for a while. It was over the noon hour, kind of the middle of the trading day, and really enjoyed that. It was really my first experience of hosting a show like this that was live. And so it was a lot of fun. And I am really excited to have Erin back. Welcome back, Erin. Been a long time.
Well, thank you. What an introduction. Yes, I'm glad to be here. It's great to see my old pal. And I think it's really timely that we're together today, since I've been always known as the bear and you are always known as the bull. And I think we're definitely going to have a good discussion today.
Yeah, well, I'm going to let you do most of the discussing because I've already, kind of given my thoughts on the market. But I've pulled up a chart here for you on the spider. why don't you take it away and explain what's going on here?
Absolutely. So yes, we had a very forceful move today to the upside. Certainly, I will say more powerful than I did expect, which will probably end up giving us an upside initiation climax. So we'll have to see how that chart turns out. Most of the indicators, unfortunately, that you're going to see on our charts don't update until about 2:30. So I'm kind of going off data from yesterday. I'm going to have to kind of guess what's going to happen today on those indicators. But ultimately, I do like seeing my PMO. It's starting to turn up just a little bit. RSI popped way up into positive territory. Volume was just intense today, which is why I'm thinking maybe this will turn into a little bit more of a bounce than what I had actually planned on. So, when you get this kind of upward thrust, it needs to dissipate somewhat. And I think that, we're probably going to see a little bit more upside before we see the ultimate downside, which will be painful, in my opinion.
I don't know. I'm not going to comment. I'm not going to comment. I will say.
I know.
I will give you the overhead.
I'm poking at you. You can tell, right?
You're poking the bear. I will say that this first initial resistance is going to be important, and I do think the leadership. If we break out, I think it's going to be really important to see that leadership. Did you have anything else on this chart? You want me to move?
Yeah, I would say a lot of what was going on before this decline was that leadership in those very defensive areas. So I agree with you in that regard. We'll definitely want to see what's leading. Today certainly was interesting, seeing those aggressive groups up.
Yeah, no doubt about it. All right, what's the next one you got here? What's this?
All right, so this was what I was hinting at, our climax analysis chart. So what we look at are the net AD volume, and then I look at the total volume and the VIX. I'm looking at the up-down volume ratios and down-up volume ratios. So what we do is we look for those thresholds that we've marked to be overcome. And you can see that the last 2 days, I don't actually have them listed in here. I apologize for that. But the last 2 days, we've actually had climactic behavior. And our call on those climaxes was a downside exhaustion. So we were expecting some upside, or really, I was thinking we'd see more of a pause. Like I said, I wasn't expecting this kind of a strong rally to the upside. But I don't think it's going to be lasting, and I'll show you why on these other charts.
All right. You ready to move to the next one?
I am ready.
All right. Let's
I
see.
said I can talk forever, but I do want to get to everything here, and then we can have a really great discussion. But so these are my Swenlin trading oscillators, and they are short term. And then I have my ITBM, the intermediate term breadth momentum oscillator, and the intermediate term volume momentum oscillator. So we take a look at breadth and volume when we do these indicators. So you'll notice that on the short-term indicators, we had negative divergences coming into this market top. So we were already looking for some downside just from that. And they continued lower. But at the same time, my intermediate term indicators kept rising. So I was kind of like, well, the short term may be a little weak here. We're getting consolidation. But so far, they're not turning. But they did turn about 6 trading days ago. Mm-hmm. And when they turned down, that was when I basically got on Twitter. I wrote an article, heed this warning. This is really bad. You can see just in the past, we mark the cardinal tops with red verticals. And you can see what happens when this indicator turns down like this. So in overbought territory, no less. So that's really the problem I have right now, is that my short-term indicators are in decline. The STOV is getting a little on the oversold side. I'm going to be really interested to see what my indicators, these short-term indicators, do, particularly the intermediate term indicators, because I'm not going to move into a bullish position until my intermediate term indicators turn up, and they are not. They're actually increasing acceleration to the downside. So I highly doubt they'll be turning up today. STOs, maybe, but we'll see. If the STOs turn up, then I think that this little bounce is going to last just a little bit longer. But if they are still moving down, I would say I hope you enjoyed yourselves, because we're going to be in for some downside coming up here.
All right. Now, if I look at the ITBM and ITVM, clearly you can see that they're going down. What changes your mind? I mean, obviously the short term, can go every which way and there's a lot more volatility. But with your longer term or intermediate term signals here, the S2,
Oh gosh.
what would happen? Would you need to see these green bars turn back up again? Or, I'm not really familiar with this. It looks like in the past they usually go red and then they'll turn back up. But what do they do in a bull market? So if this is a bull market, if we do break out, what would you be looking for to confirm it on your side?
Well, like I said, I need to obviously see those intermediate term indicators turn up. I'm not going to be calling something deep or, a bull market, if you will, the resumption here. I'm not going to call that until I see some oversold readings on those intermediate term indicators. If they turn up right now, like I said, I will get in a more bullish stance. But at this point, they need to get oversold, and they are nowhere near oversold. So I wouldn't be looking for a longer term upswing until I get those at least in the red zone a little bit, like we saw back in December.
Okay. Yeah, that makes sense.
Yeah.
Great. Well, I mean, it's kind of a, show me first kind of a stance, I guess, is,
Kind of, yeah.
yeah, your indicators are a little bit bearish and you're not going to turn unless, hey, the market shows you that there's
Right.
staying power.
Exactly. And I trust these indicators. As you can see, they've been pretty right on as far as calling bottoms and tops. I mean, that's why we put those red verticals in there, because then you can really see how these indicators react at these certain points in time. So definitely would like to see those oversold readings on my intermediate term. That's for sure.
Okay. Well, we got about a minute and a half left, and you got one more chart here. So what do we got on this one?
I do. And I know it's a little complex here, but what I wanted to show you was my silver cross index and my golden cross index. The silver cross index in particular has been absolutely stunning in its calls of market tops and market bottoms. Again, you can look at those red verticals and they're going to tell you what they're showing. The silver cross index is such a cool indicator. It basically measures how many stocks have a 20 over their 50-day EMA within that index. So right now, 51% have a 20-day EMA above the 50. We really want those over 50% readings, which we do have on this, but it topped, and that was happening right when my intermediate term indicators topped. And now we got that negative crossover on that indicator, and those crossovers have been prescient. They really do call it. The crossovers don't happen that often, and there you go. We have one. Now, my hope is that this is going to look like June of last year, where, we get that downside crossover on the silver cross index and then get the immediate turn. But right now, where it's sitting in the turn, it was a great day. It was a great day, but I don't think that this is going to continue much longer.
Okay. All right. Well, I tell you that there's no doubt right now that it's been a confusing market. I mean, there are a lot of folks on the bullish side, maybe a lot more on the bearish side. I don't know. I don't know really how to quantify it, but we do have a lot of folks that are confused about the overall direction, and it's been, pretty choppy since we had the initial downtrend at the beginning of 2022, the first 6 months. And I mean, when you look at the longer term chart, Erin, and I'm going back maybe to that August high on the S&P 500, do you see that as one of the key levels? Because that on a longer term weekly chart, that was a really significant high. And that's one thing that I'm looking to kind of confirm what I already think, which is bullish. But is that a big level for you?
Yeah, it certainly is important because, I think that was the one that kind of marked us at that bull market, 20% up. And it was funny because as soon as we were 20% up, it just turned right back down. It's an important level, absolutely. I just don't think we're going to get there this time around. Again, I hope I'm wrong for everybody out there, but I just don't think we're going to get there. But yes, I agree that's an extraordinarily important level. But what I would draw your attention to also is when we come out of these declines like we did in June, you get that participation of stocks above their 20, 50, and 200. That's what I'm watching for. You can see they got very oversold in June. So you can see how the stocks above their 20, 50, and 200 really dipped down. And it wasn't until we started to see a little bit more action out of that where we were able to go bullish on a longer term basis. If you look at what's going on now, you can see that participation is dropping off. It's not oversold yet. So again, just another reason why I think that this isn't over yet.
Okay. Well, great insight. We really appreciate having you on here. It was great having you back for a reunion. It's been so long. Awesome seeing you. I hope everything's going well with you and your family. And come back and join the show sometime.
I would love to. We have to get together in a trading room. I need to get you in my trading room.
There you go. Just let me know. Be happy to.
Okay.
All right. There she goes. Erin Swenlin. Just a great friend. We've been doing this at StockCharts for a long time. Really excited to have her on the show. All right. We need to move on. Let's get into that 3 in 3. And what I want to do is kind of what I've been doing throughout the week. I want to look at some maybe some big companies that are reporting after the bell. Amazon was due to report after the bell. You can see up $8, 8%, just following through with some of the other big reports that we've had. If I look at the chart on Amazon, you can see this is a big level right around 114 with this earnings. If it holds up through tomorrow, we're going to gap up and print another new high or recent high on Amazon. I think that's good news for not only Amazon, but for the consumer discretionary sector as well. One that I was really waiting for was Intel, to see what Intel was going to do. It's actually down after hours. I'm assuming that it's reported. I don't know that for sure. But when I looked at the chart, I loved the fact that all this volume was coming in and it was able to take out all of these breaks. But then all the selling that led into the earnings report kind of confused me. And then we rebounded today. It's like, which way is this thing going to go? Well, initially after hours, we are going lower. So that's certainly one to keep an eye on. And then maybe the last one that I will show you is First Solar. This is one that has really been bucking the trend in the renewable energy space. This stock has been on fire. Let's go ahead and see if I can get that after hours. We saw Enphase struggle after earnings. Solar Edge really been taking a hit. And now after the bell today, we got First Solar down, not like those other two were, but down to 197. If you look at the chart here, that's right at about the recent lows over the last couple of months. So this is going to be something to watch very, very closely. All right, that is it. I really appreciate everybody, your support this week, the questions that came in the YouTube comments. Leave some more. Let me know what you thought of the shows this week. I'd love to hear about it. If you'd like the way I look at the market, go over to earningsbeats.com. Check out our free 30-day trial, our newsletter. Love to have you there. Finally, NFL draft tonight. I'm a Carolina Panther fan. Let me know in the comments. Who do you think they're going to draft tonight? Be interested. Anyway, it was such a pleasure being with you this week. Have a great day, everybody, and happy trading.